Hello and welcome to this 369forecast.com's volume episode. You see a bunch of indicators here. So let's go through them. This is the custom oscillator we have. It takes care of 10 different oscillators in one. It is a composite oscillator. Bottom, as you can see here, is an RSI, which has been modified to include the volume. So this faster oscillator is a volume adjusted RSI. These two lines are just the moving averages of the RSI, just giving us the overall bias. Now, again, we want to understand the tops retest and the bottom retest for a given day. This is a 1 minute chart right here. We want to see even the market because the reason I'm saying to use 1 minute chart on this because we're using here on balance volume. And we want to see how the trends of the volumes are shifting at the retest of critical pivots. And then we want to see if there's any divergence or piling up of decent volume, which we can use to trade. So at 1700 hours, the market closed and the new session opened up. This is New York time. So a couple of things we need to see is we want to make sure that this fast volume, which is RSI enabled volume, the faster one, let's make it fat, is above its moving average. At least, but this is a minute bar, we need that. And then again, what we are going to do, we'll use this 10 oscillators, which has momentum, it has stochastic, it has Ichimoku cloud, it has RSI, it has 5 other correlated, non-correlated instrument indicators. MACDs are there as well, right? So it has all you need across the board. And there are 7 rules how to use it. But for now, we just want to make a point that when the volume is increasing or decreasing, we can use the same thing. We can use this as a short-term trend, and we can use this oscillator pullbacks in the direction of the trend to trade. Simple rules, right? We also want to look at that pullback. It's a trend. This can be used as a higher level trend or a trend. Now this is on the same time frame itself because as I explained, volume is better suitable on the same time frame. So a couple of rules here. Retest, let's talk one by one. When we are retesting the top and retesting the bottom, that means double top and double bottoms, we want to see how the volume is behaving. Is this retest going to hold or fold? Right here is retest. And look at the volume first of all. Is it at the same level as here or not? If you look down all the way and compare the volume here. So you can see volume here is here. Oops, sorry. Volume is here in this section and the volume is here in this section. Obviously the volume has not confirmed that it's going to break out and touch this level. Now this is pure trading, right? It's nothing to do with any other deep analysis we can do, but simple market wants to retest the levels. Prior days, highs, lows, weekly higher lows, keep a track of them, put it on your chart, and then this ongoing overnight session high lows and things like that, right? So just this is the latest day, so let's pick here and we can go backwards. So the principles are pretty straightforward. You will notice that we always apply 3 principles as far as the technical analysis trading is concerned. First is we want to be at a critical level. Now in this example, we are just doing intraday retest. Market came up, was rejected very heavily. Now we don't even need any oscillators at all to trade. Actually, the bar can tell you all you need to know where it is going. We will get to that point later. So right here, market came here, got rejected. You don't know why it got rejected. I can see why it got rejected based on this. But anyways, our interest is okay. This was rejected here. It was rejected here, right? The flush, a little bit of stops and rejected here. So double tops and double bottoms. We want to look at that. We have to look at the close also what is going on. But for now, just think about that. What I'm going to show you, how to effectively use volume. All right. So now we are clear what is double top and what is double bottom. This is double bottom right there, right? So V shape. Now this is a U shape and this is a very quick V shape. So this V shape is very good to see, right? Market came here. That's why you see these W patterns, V patterns, and this break of this patterns, right? This half leg of W patterns is all. These are fundamentals. You should always be aware of it. Do you believe in them or not is a different story. Uh, okay, so now we are looking at pure patterns of price. Now pattern of interest is double top. Okay, this one came here, got rejected. Now market is coming back here. Now, if you don't have sophisticated volume comparison tool of these two swings, you know what happened in this swing compared to this swing, you can look at this normalized way of volume check. So here you can see on the bottom, volume is at this point volume was created. That's fine. Let's come down. That market come down and come back again up here. So when this happened, this is where you want to see where is volume. Now if you look at the volume, volume has made lower low, extremely lower low, right? Price is the same level, but there's no volume coming into this move. If volume was here, I would be concerned that it may go and retest this one. We don't know that yet, right? So, but we know that at this moment we have potential divergence in volume. It is below, the fast volume is below the averages, two of them, which is true, and there's a divergence, which is true. It is doing a double test, and then now we can look at our oscillator. An oscillator is going to go. This one, as I said, has MACD, RSI, CCI, Ichimoku, a lot of them all coming together at this point for a shot, right? So that's why this was a good shot. Stop loss could be here. That is a different story altogether, how to manage your money. But you have a good location based on the volume divergence. All right, so let's go here. Now this is again night session. It'll be slower. Market came here. Now this stop, if you look at this is again, as I said, we want to look at the immediate V, W, or U patterns, right? Immediately. Now this is a retest of this level, but it is not immediate. It is like how many pivots back right here. It will be very hard for you to compare this volume with this volume. But this is a very fast volume, bar by bar accumulation and distribution of volume. That's why this is a rule. Look at the immediate pivots behind you, right? Now this one you can see was a big U kind of pattern, but again, which was immediate, right? So I can compare the two pivots. Now if you look at this double top, the volume was not diverging. Even oscillator told me, okay, it may go down here, but the volume was not diverging. Now that this has three lines, it has own meanings, but we're not going to get into that. So the only way, if you wanted to take a shot on this point after you saw rejection, when this volume came down below the two moving averages, which came around here, got you some points still. Five, six, seven, 8 points. All right. So you saw one divergence. Now how about this guy? Immediate, right? Same thing. V shape. Boom. Look at the oscillator and look at the volume. Volume is making a divergence. And look at the oscillator, tells you to go long, right? So this is the exact pattern you need to see over and over and over. That's it. That is it for intraday trading. There's nothing much to be talked about it. Now that is the divergence of double top and double bottoms. There can be other patterns you can think about. There are like 100 patterns. It's a simple pattern, double top, double bottom. Where is the volume? Is it diverging? And where is the oscillator? Is it going to overbought, oversold conditions? And there we go. We got some good two trades right there. And it is night time. It will keep on going like that. Okay. Okay. So that's pattern number one. And now this is no different than the logic we discussed earlier, right? We are looking for the direction of higher time frame and the pullback on the lower time frame. This is the volume divergence, which is suitable on 1 minute chart. And then we have some oscillator of interest you are having access to, which you can use, right? So have the volume confirm your intention. So here we already saw that making a double bottom, and look at the volume here, and look at the volume here. Huge divergence of volume. It was above the moving averages, yes. But the trade entry came a little later because this oscillator was middle of nowhere, right? It doesn't know which direction it can blow. We want some of these lines to go on this side. So there we go. Even there we have triple divergence. One pivot, two pivot, three pivot above the moving average, two of them, which is still true. Divergence is pretty strong. And so there we go. All right, so let's take some money other random day. Rules should work in any market condition. That's the whole idea, right? Let's pick this is again a minute chart. Don't take it like, oh, this is overbought. I'll just sell here. I'll buy here. You know, again, this can go on for a while, and it can also go flat. Now, this flatness is another pattern. If the volume is trying to pull up, but the market is not. Now, you will see this again. These are all basic patterns which you, if you work on Wall Street, you should know all this. Where was that pattern? A few times you will see that you're expecting oscillator to do something. Well, it is moving, but the price is going flat, sideways, which basically means when it turns on the other side, it's going to blast. Let me show you and explain what that means if I can. I don't know where I saw it. So I'm very well trained in price patterns. Okay, anyways, when I see it, I will tell you that. So now I'm looking for, now what day is this? Who cares? 10:25, we went far back, that's fine. We'll just go forward a little bit. Double bottom, divergence, and there's a divergence and strength in oscillator too, so this is a buy level right there, right? Okay, how about here? See the divergence and the pattern of right here is buy level for the oscillator. See that? So the patterns are there, very clear. But you have to be so much good in your trading and training that you just can see it. You can see it right away very easily. But that's the whole trick to it. That's the whole trick to it. Yeah, there we go. So when the market is going and reacting, you know, immediate pivot right here. I can see the U or a V, you can just see it right here, right? So keep on drawing. Keep on drawing a pivot. And you see pivot, you see a pivot. Okay, do you see a divergence? Well, I see divergence in this oscillator. I see divergence in volume a little bit as well, and it is below this moving averages, so this could be a short as well. Here comes the double bottom. You see divergence. You can see the pullback of the oscillator. There we go, right? You can see how we can get some good trades easily. These are the basic things should be part of your genetics if you are a trader. Very, very important. Now if I increase this to higher time frame, whatnot, things will change in a different pattern. I'm just showing you to the lowest denominator we can trade on. We can go to tick charts also, but we don't need to go there. So this oscillator or this volume, I need to see something at double bottom, divergence here. This one is a little diverging, but I think I will wait for this guy. Obviously, when it crossed over here somewhere in this bar, you can also draw like this too, right? So, all right. How about this day? Just pick any day, doesn't matter. So, what you need to know, this is the bottom, right? Overnight, and you know this is the top. You know this is also the top. You also know this is the bottom, right? And again, double bottom, you can also see if again the price is diverging with volume. This is also pattern, right? Look at this. So at this, ready to go up, see the volume divergence, price came up, and if you see this big bar, this is what actually stopped it. That is totally different pattern. We can talk about it purely. This is your entry. How about this guy? Well, this oscillator is not going along with this, right? This one also has CCI too. You are using CCI, what is CCI, whatever. This one is the most powerful oscillator in the world. After testing 100 of those, this was invented, right? So higher high, no. Double top, yes. Divergence here, yes. How about the volume? Volume also diverged a little bit. So what we do is wait for this guy to cross over. This bar, end of close of this bar, you should go short, right? Because our momentum, our volume might just pick us in. So you will say, oh, what about this crossing over? This is not a crossover business, right? We're not dealing with this crossover. Now that crossover is good if you go back to the different model where this one becomes a very higher time frame, and then we use two of those higher and lower time frame logic where we are moving in the direction of the higher time frame, and we are trading the pullbacks, right? Now I'm just showing you a specific pattern here, volume divergence, right? Volume double top. This is a double top. Just keep on drawing as market moves up and down. Just keep on drawing. Double top. Immediate pivot, right? I'm not looking for this. I'm not comparing this guy with this guy. That is a different technology altogether. How the market is going to curve, that's a different story altogether. Anyway, you want to look at immediate pivots, immediate pivots, immediate pivots. What's going on here? What's going on here? So let's check. I don't know what's going on. I want to go a short here. Okay, I want to go a short here. My rule says wait for the volume and wait for the volume divergence. So there was a little bit divergence. Wait for it to cross, which happened somewhere here, I guess. Right? If your stop loss was here, you got a again 1 to 5 reward. So you cannot say I want to in this model. I want to just have 1 point stop or 5 point stop. This is if you this is your stop, should be 1 to 5 ratio, 1 to 3 ratio, right? Lose 5 points to make 15. Lose 3 points to make 9, right? 3 to 1, 3 to 1, 3 to 1, 3 to 1. But we know that the volume is behind you. That's the main thing. All right, let's do the last one, and we got the idea here. Again, this is a double retest of the double triple retest here. If we are interested in these two nearby, and we also interested in these two nearbys. Okay, I look at my oscillator. Okay, I want to go long, but where is my volume coming? Volume, as you can see, is diverging at this level. See this? You can also draw this line like this if you want to. Just when the break happens of a triangle pattern with the volume behind you, volume came behind you, oscillator was saying to go long, right? Oscillator was saying to go long here, oversold, volume crossed, and he got some good move, you know, 7, 8 point. Now this is 1 minute chart, you may get 10 trades if you want to trade that way. If you want to trade slow, you get slow. You make it slow. But the rules will not change. So let's see if we want to trade on a 30-minute chart. What happens? Now this is gonna, you have to hold the trade much longer. Stop loss will be much longer. Option may be better suitable for this. Now this was a CPI report, right? We were just trading 3-4 trades right here. Was a minute chart. But look at this. Market is going sideways, sideways, sideways. This is one of the trick I use to pick the direction when I post it, the direction also, right? So look at this. That's how you see it. Now this is only one dimension of the market, which is ES. If I add the top weighted stocks to the picture, then you have a super. I'm trying to create something dashboard online. So this is the sideways action, right? The news is waiting. News is gonna come. It's gonna blast. Volume started moving up, right? So if you want to take a risk, now this is CPI once a month, ADP reports once a month, Fed news once a month. 3-4 trades a month, you can just make the entire month, right? So again, this one also worked out very well. This was oversold, not completely super oversold, but this volume was going through. This, you could have entered here, you entered here, you got, options was a good ES options. This is $10,000 right there in half a day. All right, so let's see. You can just find quickly some patterns on, again, immediate pivots. This is immediate pivot on half an hour. Where's the volume? It's diverging. Where's oscillator? Ready to go long, right here. Right, you have to wait for hours and hours, but now you're looking at a bigger 70, 80 point moves, 50 plus point moves, right? So if you buy one ES option for $1,000 risk, if it goes to $3,000, you're out. And you will not lose more than $1,000. You can do vertical spread also, but again, this is just part of how you want to trade it. Now, in this scenario, if you just patiently wait for the divergences, which is great. Now here, now you have to look at some pivots, right? Because remember, we have slowed down the time. This is a big pivot. I'm always looking at this. Am I willing to go a short here? But is there something telling me to go a short at this point? Nothing. How about this point? Yeah, nothing here either. Why? But look at this. Where is the oscillator here on the volume? And it is like going higher high. So it's not really divergence. It moved. Now, if you just stick with that, I don't want to talk too much about different models, but you got the idea, right? So here you're getting 70, 80 points. Here you're getting 5 points, 10 times if you can handle the stress. Okay, so now this is a good one, right? You have to wait. Now if you go down that slow, things will slow down for you, right? Obviously. Here I want to go long, right? Here I want to go long. So what is going on here? This one is ready to go long, 30 minutes. Okay, how about the volume? Volume you have to wait. But if you look at the divergence of volume, is there a divergence? No, it's doing a retest. Same level, right? This level, same as this level when these two things were formed. Now this oscillator is going there, right? So if you want to trade, it's not a real super divergence, which is fine. So at least wait for crossover to happen. But this is not really a divergence trade. Now this one is a divergence trade. You can see here. Market came back to retest the level. Oscillator is ready. Again, 3 oscillators are there. It is ready. Telling you to go short. Now I can see divergence, right? And I get 100 points. So 100 point is going to be same as 10 points a day for 10 days, right? So that's the whole approach we can adjust to. So if you want to slow down, right? 15 minutes, 5 minutes, it's up to you. The patterns are still the same. So we got this good one. This is not a trade, right? One trade. So how many trades did we get actually? Now this is going sideways. This one is moving up, obviously. So it is getting momentum here. So this is for the news. On the news days, as I said, Fed news, CPI news, ADP news, those days, you can see how the volume is moving in the first impulse will go in what direction. This is the way to do it. So we can say we got two trades. So again went up 150 points. Let's say you got 100 here. Let's do 50. Okay. Our logic is 50. Only get out 50, 50, and we got 50. Right. 150 points in 10 days. And 150 point in 10 days is 15 points a day. How is it different from trading 10 times a day? Is not. Financially, it is not. Right. So anyway, so how about this guy? Another one. Retest. Right. So this one has a clear visibility here. Right. And then oscillator was there 30 level. Was not too impressive, but it was on the bottom side. It was not in these two bands, which is okay. So this is how swing trading can be also conducted with this. We already saw those. Now this is higher high. This is a lower low, and oscillator is there. This is a perfect trade actually. These are the perfect patterns, right? This exactly is the shape you want to see on both sides. Did you get 50 points? You got 50 points right here itself. And then how about here? Retest again came next day, right? Immediate retest. Immediate retest. This was a good divergence, actually, again. Right? Market is going sideways. Volume is not catching up with this, right? Which way is the volume going? Market is going sideways. That's what I was talking about earlier. When market is going sideways, and whichever way the volume is pulling, that is the direction it will go. Now you guys may not have this professional build tool. These two oscillator alone is all you need. But you can think about, I gave you all the ideas. This is RSI, which is adjusted to our on balance volume, and you adjust this to the market you're trading, that market frequency. And this is the chart simple. And this one has, as I said, there are 7, 8, 9, around 9 oscillators inside these. You don't know them, but you can again take 10 different non-correlated oscillators. I gave you all the names: MACD, RSI, CCI, Ichimoku, Williams R, right? And then combine them into a composite mathematical formula. Why you have to look at 10 different things when you can do some smart mathematics around it? That's what we have done. All right, so again, bottom is here. All right. So the point is, I think, taken very well on this subject matter. So I'm always looking at this is my oscillator, perfect. I want to go short, perfect. Let me look at the last two pivots. Now this is half an hour chart. This is like last 5 hours. Oscillator is not diverging, is going higher high, but what about the volume? Volume is diverging, right? Volume is diverging at the point of interest where we want to trade. Don't force the trades. So that's one approach, right? We just showed the double top, double bottoms, and the divergences on 2 different time frames at the point of interest. The other option is that's not really a good option, but dirty option, which is better to trade the divergences as I explained. Other option is on the higher the time frame you go, this volume, this can also give you some directions, right? So personally, I will not recommend that unless you have this tool, but I'll just give you the idea anyways. Now, if you see these two lines are built here, they're crossing, right? This is 50. This is the RSI adjusted volume or volume adjusted RSI or volume fed RSI on balance volume. Now, this is a moving average 50 and 200 or 50 and 90, whatever you want to trade because everything rhythms differently, right? I use 369 frequency only because of Tesla. And my testing has shown that to be the most valuable asset you can do. Now this one is immediately lower low. Okay, and then the divergence, beautiful at the oscillator level, right? Again, you'll not get 10 trades a day. This is half an hour. We're looking at a 15 points average, and you'll get 300 points a month. Why do you care to trade every day? But that means you have to trade something else. You just cannot trade 50 contracts or 20 contracts with 4 tick stop loss, right? But this is, you need to give some room and time for it to cycle. So not talking about the cycles, you can simply also do the cycles here. Now I think it will be better to go on a higher time frame, but I'll just give you the concept. As you can see, when this guy goes above this, right? So from here to here, obviously you should only look for longs. Now this is where you can put this on 30 minutes, and on top of it you can put a 1 minute chart, and then you can say, okay, this is only long only bias. So you can generate biases on this. You can say, hey, this is long only bias. I'll just take long. And the shorter time frame, you just do the pullbacks.